We have a relationship with all of our investors. That's the type of syndication we do. We can't advertise and we have to have a relationship with our investors, but we can take accredited and non-accredited investors. So we have a relationship with all of them. And part of that, building that relationship is building the trust that they have to have with us. Most people that come to us already have an understanding of real estate investing and maybe have done a little bit of it already. And a lot of them, maybe it's just their house, but they've seen how that works.
But this is my house, Mommy. So what I asked Mr. Kringle for, it is, I know it is.
Welcome to The Pursuit of Home, coming to you from New York City. This is real people buying real estate and their unique journey to get there. We share the tips, tricks, and frameworks to help you navigate the bumps in the road that you won't see on reality TV or social media, and which no one has talked about until now. These are the emotional, psychological, ethical, and even spiritual challenges you're more than likely to encounter yourself. Learn from experts who've been there and hang out with me, Scott Harris, your host, who's helped thousands of people buy homes in Manhattan over the last 2 decades. Welcome back to The Pursuit of Home, where we explore what it really means to find and create a place to call home. On today's episode, we're really going to dip our toes into the waters of multifamily investing, because what everyone wants to do is, in some way, build long-term wealth through real estate. Home buyers too, you too, can learn from the systems and mindset that successful investors use. So today I'm joined by Lee Yoder, founder of Threefold Real Estate Investing, a former physical therapist turned full-time investor, which I'm definitely going to want to talk about more, Lee, and somebody who's carved out a niche syndicating investments in what's called C-class apartment buildings in Ohio. Lee brings a clear, purpose-driven approach to investing, and he's just as passionate about helping others grow as he is about growing his own business. We're going to talk about why Lee focuses on overlooked markets and value-add properties, which may sound really interesting to your ears because a lot of home buyers are doing the same kind of thing. Also, what Lee's learned from helping investors get started and how he's also navigating buying a home for his own family. Lee, welcome to the show.
Scott, I'm excited to be here. Looking forward to the conversation.
Lee, you made a pretty dramatic shift from physical therapist to full-time real estate investor. What pulled you into this world, and why did multifamily, and specifically C-class, which is probably less sexy, I know we'll talk about this, C-class properties, why did that feel like the right fit for you?
Man, it was a long journey, Scott, so I'll try to give you the short version. But, you know, when I was a physical therapist, I was enjoying it, but not that much. And I didn't know what I wanted to do. So I feel like I kind of got into physical therapy without, really knowing what it was going to be like, knowing that much about myself and what kind of work I was going to enjoy. And then, I think by God's divine plan, I ended up getting on with a company as a physical therapist, but I came in and became the clinical director for them after a year. I was doing home health physical therapy for them. Well, this was a startup company in Cincinnati, Ohio, where I live. And it was a staffing company, actually. But when I came in the office, I started doing like business development type work. I was kind of like a director of operations. I was doing sales. I was managing a bunch of therapists. And I loved it. I didn't miss being a physical therapist at all. I loved the business side. I felt like I was building something. It was exciting. But I did get to a point where I'm like, I don't know if like being with this company is a long-term plan. My wife and I were starting our family at a time. And it was, kind of your typical climbing the corporate ladder of like, just got to be in the office. This is pre-COVID. So you got to be in the office, got to be in the office, got to be in the office more. I was moving toward a promotion, and, the VP was like, yeah, you're gonna have to be in the office more. You're gonna have to stay. And it already felt like I was spending about as much time in the office as I felt like was good for me and my family. I was getting up at like 4:30 in the morning trying to get work done because I'm like, that's when my kids are sleeping. And I really like to work. So I was like, but they're like, yeah, that's good. Keep doing that. But like, you also got to be here till 6:30 because that's when everybody else is staying till, because most people in this company don't have kids and a lot of them aren't married. So like, you got to be here if you're going to be over them. So it was like, man, this isn't it either. About that time, Scott, I started like networking, looking around, read Rich Dad, Poor Dad, it was like, oh, wow, there's a whole nother world out there. There's a different game that some people are playing. I think I want to play that game. And so through some networking, a guy at my church was in real estate full time. The more I learned about real estate, the more it spoke to me. My dad's in construction, so I grew up around construction. I did some of it in college, this summer as well as in college. And I like using my hands. So I'm like, the more I learned about real estate, I thought this might be it for me. And, so I actually left that corporate job, went back to being a physical therapist, went back to home health, which again, liked that job. Okay. Wasn't passionate about it, but it did provide me a lot of flexibility doing home health because my patients would just come to my phone. I could schedule them whenever I want. I only got paid when I was doing visits. So when I'm not working for 4 hours, I don't feel bad because I'm not getting paid for it. I just got paid for the visits I did. And so it was like kind of the perfect job to have a side hustle. So 2016, left that corporate job to go back to home health physical therapy, but knowing I was going to try to do a real estate side hustle. So got my wife on board begrudgingly. And, we flipped a house in 2017. Then we did a duplex in 2018. We got a 16 unit in 2019, got a couple more small multifamilies, and I was hooked pretty early on. You asked why I got into multifamily specifically in C class. This whole time, while I'm doing home health physical therapy, a lot of drive time. So I'm listening to a lot of podcasts, educating myself, and the guys and girls that were on, the Bigger Pockets podcast or some of the other ones that I really identified with. And of course I'm listening to audiobooks too. Like multifamily just made sense to me. The scale of multifamily, where you could say, hey, you can get a duplex. And, once we got a duplex, it was like, well, this is profitable, but it doesn't really move the needle much. If we did 10 times a duplex and got a 20 unit, that would move the needle more. If we got a 200 unit, that could be life-changing. So it just felt like it was worth it to me to kind of scale, but we just kept taking the next step toward that. And the more I learned, the more I got into it, I was like, yeah, I think this is the way to go. And C classes, because, that's, to me, still today, I would say that's where you can make more money if you're willing to work for it. There's more risk there, but higher risk, higher reward, takes more work. And when you're getting started, I think that's where you should start. I think you should be willing to take more risk, and willing to work really hard. And, compared to me, Scott, I'm trying to create my wealth. The guys and girls who have already created their wealth, they would never take on the projects I would take on because it's not worth it to them. Like, oh yeah, Lee, great. You're going to make, you're going to make $100,000 on that project, but you're going to work your butt off for it for 3 years. This project that I'm buying, I'm only going to make 50 off of it, but I'm not going to do much work. Well, that I can see why that sounds really good to them, but for me, I need the 100, right? And I'm willing to work for it. I'm all in. So that's kind of why I got C class. The first couple of properties we bought, and some even today, I feel like I'm buying properties other people don't want, but that's why I'm getting them at a good price, and there's more work there. So anyway, I said a lot. I'll stop talking, but that's how I got into it and why I got into C class and all that.
Yeah, I have a lot of questions from what you said. What I want to repeat back for people is that the mindset that you brought, there are a couple of things I want to point out, then I have a question. One is that so many people start their jobs and they feel like, oh, I can't necessarily switch careers. I just want to give you, some credit for being bold and saying, you know what, I don't feel called to this anymore, or I thought it, and this other thing's calling me. And that pull to something new, I think a lot of home buyers definitely feel also. And it's just as scary sometimes to leave the home that you're in. But what I really want to point out too, from what you were saying, is that you can divide people who are, because when you're buying a home, not just investing, you can kind of divide, as I see it, you can divide the world by people who are like, want to buy and flip. They just see, okay, I'm buying and there's appreciation. I don't have to do anything, quote unquote. And I'm just going to make a profit because there's a rising tide. And if I need to sell tomorrow, I'm not going to necessarily lose money either. It's like it's a little bit easier to wrap your head around, as opposed to the value creators, the value add people like yourself that see, I have to do some work. So it's like more risk, more effort, but more reward. And when you're going to buy a home, and I know we're going to talk about that too, there are people that don't want to do any work. And that's totally okay. As opposed to the people who are like, I want to buy a place that I can fix up and add value to. It's really important to know which one you are. Because if you're like, hey, I make money in other ways. I have lots of I really am passionate about whatever I'm doing, or both people work in the home. If you are that person, you don't want to do any work. It's not going to make sense. Don't take on a big project. So yes, all these C-class properties get a bad rap. They're older buildings, and there's a lot of deferred maintenance and
higher delinquency, higher vacancy. Yep.
Are there any misconceptions about this that, you think, and again, you said yourself, you're buying the things that nobody wants to buy. It's not like you want to create more competition against yourself, but what are there misconceptions about this, like asset class, and how do you approach the challenges in a thoughtful way so that you don't let them scare you away?
Yeah, I think there's some misconceptions. I think the one you hit on is definitely true. They're older buildings. So I mean that's part of what being C class means. They are older buildings and they are more expensive to maintain. That's for sure. What I would say about that, Scott, the way I get around that and the way people should get around that, same thing with a house, is like just make sure your budget is a good budget, right? Like, okay, the plumbing, we're gonna replace a lot of plumbing. Look, do we need to replace the roofs? These windows look pretty good, but this building's 50 years old and the window's original. How much longer are they going to, but if you come in with a budget for that, then when those things come up, it's just part of the budget. And I think one misconception is that, I've talked to guys who are like, well, geez, I don't want to buy a building where rent's 500. Rent is not 500 anywhere. That's so ridiculous to think that anybody's paying. I mean, maybe they're thinking D class. There is definitely a big difference between D class and C class. D class is where nobody wants to live, but some people have to, and they're dangerous areas, and it's bad. We don't do any of that. C class is where people want to live. Now, would those people rather live in a B class property in that area? Yes, but it's still, they want to live in that area. There's good schools in that area. It's just, this is an older building and the units aren't fancy and there's no amenities, so we don't charge as much rent, but there's still nice units, it's safe places. So I think that might be, and I mean, we rent our, now this will sound, like nothing to you, Scott, but like, there's still $1,000 to live there here in Cincinnati, Ohio, $1,000 a month. And there's some people, and yes, some of the B class are that's like 12 to 1,500, but there's not that big of a difference. And a lot of, people will pay, I feel like, so much more for a B class property, and they don't quite realize that the rent isn't that much more than a C class property. So that's where I feel like it's hard for me to make the numbers work on a B class property because what guys pay for them, again, less risk. And so that's fine. If you're saying, well, yeah, Lee, I'm good with less of a return, but I just think it is less of a return. There is typically what I see just compared to B class, there's less return there because people are going to pay so much more for it. And the rent isn't that much more. So I think that's a misconception to me, that these are nice properties in good areas, good school districts. But yeah, they're older. There's not amenities. You don't have a pool. You don't have a tennis court, whatever, a workout facility. It's just basic. It's like, again, people would like to have more, but they're comfortable. They're happy with it. And it's what they can afford.
Now, you're not necessarily, I also just want to point out to people the mindset that you're suggesting, which is have this budget in place for, and kind of make sure that you have the reserves in place to do the work that you have to do. It's not so different from buying a home for yourself, where you need to look around, and it's not about just having this, basic inspection where an inspector comes in. It's actually more like bring in a contractor who has a different eye, who says, how old are the windows? How old is this? What are, not worst case scenario, but what's likely, what do I need to replace? This isn't where you're going and saying, hey, seller, you need to pay me X, Y, and Z for all these things.
Yep.
It's just preparing for the likely that I'm going to have to replace the roof. I'm going to have to do this. And so it's just taking a step back, and that can definitely be hard to do when you're falling in love with a house or a location, maybe a little bit easier when you're an investor, which I want to talk about. You're not necessarily buying these entirely with your own money. You're syndicating these, right? And that in itself, you're helping people maybe invest in real estate for the first time. How do you build trust for investors? Maybe somebody is renting and they're like, hey, I want to be invested in real estate, but I don't have enough money for a down payment. And they decide they want to invest with you. How do you get people over the hump of warming up to, the comfort level of investing, especially today when mortgage rates are, when borrowing rates are higher and cost of different, renovation stuff can be higher with tariffs and what have you.
Yeah, it's definitely a process. We have a relationship with all of our investors. That's the type of syndication we do. We can't advertise, and we have to have a relationship with our investors. But we can take accredited and non-accredited investors. So just a little bit of background on type. So we have a relationship with all of them, and part of that building that relationship is building the trust that they have to have with us. Most people that come to us already have, yeah, definitely most, not all, but most have an understanding of real estate investing and maybe have done a little bit of it already. But I mean, in a lot of them, maybe it's just their house, but they've seen how that works. Like, oh, I bought my house 20 years ago. It's appreciated. Like, I kind of get it. You're buying, 100 tiny little houses all in the same building, right? Just 100 units or whatever, an apartment building. So they just kind of have a concept of that. And it takes time for them to see what we're doing. And a lot of times it comes through referrals. So if they didn't already know me, they know somebody that's invested with me and they trust that person, and that person's telling them that they've had a really good experience with us. So that's really what it comes down to, is having a track record and being able to show, we've already done this, 6, 8, 10 times, and we're just going to go try to do it again. And people that and trust have done it with us, and they can tell you how transparent we've been and honest we've been and successful we've been. And so that's usually how it goes. But a lot of them have at least some experience. Again, sometimes maybe that's only their house. A lot of them have maybe bought one other investment property or a couple other investment properties, and they kind of have an idea, but this is still a pretty new big step for them because they're giving up control by doing it with me and letting me have a little control. And it's also, almost none of them have ever bought an apartment building. So it's different that way too, but there's some familiarity with there, and then they just have to build trust with us.
Got it. Now I want to shift gears a little bit, because you're in the market yourself for a home to buy, to live in. As somebody who analyzes real estate for a living, how are you approaching your own home search differently than maybe most buyers?
Yeah, it's funny. And Scott, as you were talking earlier about the different kind of buyers, it really got me thinking, because I think that's changed a little bit for my wife and I. So we've been in our house 13 years now. And, we live north of the outer belt and from Cincinnati. So we're kind of just a little bit in the country. We have 4.5 acres. Everybody around us has 6 acres or so. The people behind us have 50. So we're like just outside of a small town. And so we love that. We love having some land, but being kind of close. Like, we can jump on a major highway and be down to Cincinnati pretty quick. That same highway will take us to Columbus. So I like having our own land, but what we're looking for, Scott, is more land. We actually want more land. We'd like to have 20 acres or 50 acres. And so, but anyway, when we bought this house, my wife and I were very much like, we want a piece of crap that we can fix up because we need a deal and we're poor. And we were at the time, I wasn't even working yet. I was still in grad school. And so when we bought this house, I mean, it needed a ton of work. And we were happy to do it. We felt like, that gets it to us cheaper. And then we can add value. This next one, we feel like we'll probably have to do that, but I wouldn't necessarily be that buyer that says, Scott, we got to find something that we can add value to. I can't just buy what we would call like turnkey, like a turnkey property where it's all good to go. And I would be okay with that. I think we're probably always going to find something to do. Maybe most people are like that. Again, for us, we want land. We want there to be a barn. If there wasn't a barn, we'd build a barn. So maybe we find stuff like that to do, but I'm not hung up on that. If we found a house and it was the right house, I'd be okay if it didn't need much. Get a lot of country homes do, and we're definitely okay with that, and kind of expecting that, but we don't have to have that. But I think I got away from your question a little bit, so maybe you have to restate it.
I want to back up. Why now? You've owned the house for 13 years. Is it the size? Do you feel like you're sort of like, what about, I know you said you want more land. Is it, if you could take your house and pick it up and move it to a place that had more land, would that work? Or is there something more about the house that you're sort of called or is it just too small?
We would like a little more house. My wife and I both say we haven't outgrown our house. We only have 2 kids and we have 3 bedrooms on the main. It's just a ranch. It's a 1,300 square foot ranch. So it's not big, but we don't really want a big house. We've got a full basement that's 1,300 square feet too, and we have a bedroom down there. We have 3 bathrooms. So for 4 people, we're fine. But our like our main space, our main like common area, we always say because we have 4.5 acres, we've got a really nice backyard. Most of our property's in the front, but it's just we're off the road in a really nice backyard. So when we have a birthday party or a party, we can if the weather's good, it's great. If it's raining and we have to move inside, we don't have enough space, and we don't love that. So it's not the end of the world. I mean, that's a handful of times a year, right? But we would like to have more space. So we would like a little bigger house. We would like a little more house. But it's definitely the property. We'd be okay picking our house up and moving it. Now, we might then choose to do a little addition onto our house. But yeah, we're not that upset with our house. It's more, we'd like more land. Our kids would like more land. We have some animals and stuff, and that's more what we're chasing than the house, and as opposed to the house.
Right. So meaning that right now you're a builder, you're a contractor, you fix things up. You could theoretically, with 4 acres, you could expand your house now, and you're still like, yeah, but I want more land. So it's the overall picture. And it sounds like you want to be able to, I call it in a place where we sell apartments, the efficiency of the space is even more important. And there's not outdoor space. We don't have backyards very often. We don't have garages and things like that. But it's people sometimes, if they have the means, they're thinking about that 1 or 2 or 3 or 10 days a year when they entertain a lot. Thanksgiving, and they want to buy a home that can fit. If their kids are grown, they want it big enough so that their grandkids come stay, things like that. And so has there been a surprise? Have you already started looking? Has it helped you understand kind of what the people that come into the spaces that you've created for them, the C-class properties they rent from you? Has there been any surprises so far as you've been thinking about making this move?
Yeah, it's funny. You caught me on a funny day, because we actually just talked to a realtor today for the first time, because up until now, I just look on Saturday mornings. I just enjoy real estate. So my kind of tradition, I'm up early every morning. So just Saturday morning, I just look at, realtor.com, Zillow, look around. So I've been looking for a long time, but I haven't been as serious. But stuff's expensive, right? So, what we're looking for, and again, prices are so different. So you're probably like, Lee, that's not that bad. But, when I find the amount of land I want, it's $1 million. It's $2 million. I mean, the land I really want is $2 or $3 million. And that's out of our price range. It just feels ridiculous for us to spend that much. We probably will someday, but probably not that's one. But, and then the other thing too, with a lot of farms. So like when we find land, there's a lot of horses in our area. And so we'll find a property that's pretty good. But there's a mansion on it for one. And we are not interested in a mansion. I said, we want a little more house. We don't want a ton more house. So we're just not interested in a mansion. We have 2 kids. We're done. They're 9 and 11. So, but some of these big properties that we like, on 50 acres have a giant mansion, and then they have horse mansions. Okay. They have a giant horse barn and then a giant indoor riding arena, because, these wealthy people used to have, 6, 8 horses of their own. And then other people boarded horses and they had a riding arena, and we don't want all that stuff. So it's like, that's just way too much. And then the price reflects that, right? It's like, that land might be worth, $1 million, but they think the house is worth 6 or 7, and maybe it is. And then those barns are worth 3, but it's like, yeah, but I don't want to pay for those barns because I don't want them. I mean, I'm not mad about them. It's not like I can't, but I don't want to pay $300,000 or $400,000 for those barns because they're not going to help me. So we are running into that. And then,
what does the local realtor have to say? Because my experience with home buyers near me, I sell in Manhattan, but not in the Hamptons. And I have clients who've said, oh, I want this much land. I don't need that much house. But when they build on this size land, they build a 7 million, it's the same exact thing,
Yeah.
just slightly, the numbers are slightly more,
Yes.
but they want a 3,000 square foot house, say,
Yeah.
and what they build on there are 7,000 square foot house, because that's what makes sense economically. And so what does your realtor tell you locally Have they given you some insight? Maybe are you going to have to build a whole house from scratch to, are you going to have to buy just land and then site it and do all the work? What are they telling you?
I think we haven't gotten into too much, but I think she would say that, and I've seen that. We're open to that. We've seen some property. If we found the the right piece of land, we'd probably be okay building. But now on the other hand, there definitely are properties where the farmer has lived there for 50 years, and maybe 100 years. Or it's been in the family. And so you kind of have the opposite of that. It's a tiny old house. And so that's more up our alley. And so I think she's more like, hey, let's go find that for you.
Yeah, that's going to be that feels like, as soon as you said it, it's like, that's the obvious outcome.
Yep.
And you're just going to have to, pitch a tent for a while or something.
That's right.
Pull up the RV.
And that my wife is big on that. So just bringing her into it, she's really big. And we're probably in the position to be able to do this where she does not want to be rushed. She wants to take her time moving. So she wants to buy and then sell our house 3 months later, 4 months later. She is really set on that. So that will, affect us a little bit. But I like that plan. I mean, I'm fine with that. But that's, she doesn't want to have to, be contingent on ours and then rush to sell ours and rush to move. And she wants it to be. And I guess the reason I thought of that is because she wants to have time to do the renovations that we want to do before we move in, even like just at least.
I bet it's going to take longer than 3 months.
Well, and she'd be fine with it. Yeah. She's not. Yeah. She'd be like, okay, then we'll wait 6 months to sell our house. We'll wait a year to sell our house. Fine. Yeah. She wants to, and just some of the bigger stuff, but you're right. I mean, those projects take time. I mean, you got to find the contractor, wait till, the good ones are booked. Right. So yeah, it could.
How do you have contractors that are you investing in areas close enough to home that you could use your own crew, or is it totally different level of crew?
It's totally different. Yeah. Yeah. The guys that do stuff in houses, I would never afford their prices for you. I'm like, it's a totally different mindset. Doing a house is very different than doing an apartment unit.
All right. Well, this is really, one of the joys of this is we get to be flies on the wall for what people are looking for in their homes across the country. So thank you for I have 2 more questions for you, and then we can wrap it up. After all of the work you've done professionally, all the things you've experienced, and living in your home for say 13 years, I think you said, what does home mean to you now?
Yeah, great question. It's all about family. For me, home is, when I think about home, I think about all the time I've spent with my wife and kids. And, we spend the most time at our kitchen table. We always eat meals together. Not always lunch, of course, they're at school and we're up at breakfast always, and always dinner. And then we play a lot of games around the table, and then we burn firewood all winter long, and our fireplace is right there. And so it's that, and then it's being outside together, our animals, spending time outside. My wife's a big gardener, so we spend a lot of time in the garden and outside. So it's just a place where we spend time together as a family and enjoy each other's company and grow together and relax. Just creating memories together, watching the kids grow up, all that. That's definitely home to me.
Love it. And if you could leave our listeners with one piece of advice as they start or continue their own home search, what would it be?
Well, I'm going to put my investor hat back on. Okay. So, if there's one thing I believe in, Scott, and I'm not getting political in the sense that I'm not going to take either side of the aisle, because I think they're all the same. If there's one thing I'm confident in, our government is on a one-track train to devalue our currency, and they're going to keep doing that. There's no other option. They're going to take on more debt. They're going to devalue the currency. And so you should own assets. So I think buy a house, buy a condo, over a long period of time.
Buy hard assets. Buy hard assets.
We're going to have inflation. You need to get on the right side of that. You need to own assets. So a house is one great way to do that, because you also get to live in it and enjoy it, but it's going to be an asset. So buy assets. A house is a great one to buy. You got to get on the right side of things.
Got it. Well, Lee, thank you. I really, it's really great to hear an active investor and an active person on the hunt for a house talk about what home means and how you're thinking about investing. And thanks a lot for being here.
Yeah, thanks for having me, Scott. It was fun.
That's it for this episode of The Pursuit of Home. I hope today's conversation gave you insight, clarity, and maybe even a new way to think about your own home search. If you enjoyed the episode, please take a moment to follow, rate, and review the show. It really helps us reach more people on their own journey to home ownership. The Pursuit of Home is proudly produced by Fame, the B2B podcast production agency. Find The Pursuit of Home on Spotify, Apple Podcasts, and everywhere else you listen to podcasts. And if you want to connect, you can find me anytime on social media or at Magnetic. Until next time, happy home hunting.